Starting to populate a little bit, and I'll just start speaking, even though this won't be the formal start of the interview.
How long are you envisioning this would be?
30 minutes. You guys have been busy this week. It's like Banyan puts out no news for 2 months, and then it's like boom, boom, back
But
to back days.
they go together though. And if
Yeah.
you want people to, an analyst to actually run some models on your network, they should have the most updated resource. So to let them do all that work and then put out a resource later is a little bit disrespectful, right? Like it's like it could, it changes all my numbers and you get another little write up. But, honestly, if we were a bigger, we don't play games like that, and maybe we should, but it's really important to show the best face of the project going into BMO, PDAC, before we start the season. It shows that we've got better models and data to make decisions on. Anyway, I'll stop talking because we're about to start.
Yeah. Yeah, so I'm speaking with Tara Christie, the CEO of Banyan Gold. And I feel like calling her the founder, but she's not officially the founder. But she kind of is, because the company took a whole new path under her guidance. And this week, Banyan put out an updated resource for the AurMac project in the Yukon, the Mayo area of the Yukon. And that total was 7 million ounces total for the entire project, and 6.2 million ounces in the power line deposit alone. So first, before we get into the nitty gritty and maybe some of the challenges, let me give you a little congratulations, Tara. How does it feel to have achieved this milestone?
Well, it's been it doesn't really seem like it's a milestone because we've seen it coming, right? And we're not one to sit and rest on our laurels. It's like, yeah, we're here, and yeah, it's a really big deposit, but we aren't really getting value in the market for it yet. So that's really, in my mind, what are the next steps? How are we really going to continue to add value now? And I think people can see it's still open. So yeah, 7 million, but that's not the end of this deposit. It certainly has some room to grow, both east and west and south and at depth. And now that it's so big, 200 meters may not be the depth of an, that's always been the standard depth of an economic pit. But when you've got this big flat bottom pit, that really makes you think, well, actually your lowest strip ratio then is down right under the pit. So there's lots of things that we're thinking about now that we've got this new data. And if you look at the section on the website that we put an east-west section up, and it's really exciting. You can see the core where there's some, in the center of power line, where there's some higher grade. And you can also see that on our 3D model, which is on our website. We show both the resource, and then we show what happens to the mineralization as you change the cutoff grade to 0.6 or 0.8. And, that kind of gives you some visualizations of this deposit and just how robust it is.
Yeah, I mean, it's like almost every hole hits wide intervals of anomalous gold, and some holes are obviously better than others. My next question, you kind of alluded to one of the questions I have, regarding the share price compared to the milestones that you've achieved. But I'm going to save that for later in the conversation. I spoke with a couple of other shareholders of Banyan, longtime investors, and both of them asked me the same question. And it was, why isn't more of the resource in the M&I category now? And what's the plan to move some of that into the M&I category? So it's inferred right now, which is wider spaced holes.
Yep.
And now what's next in terms of maybe putting together a higher grade core, of the deposit?
Well, some of the modeling work that we're doing in the block models is certainly giving us guidance on, where the higher grade is. And we spent a lot of time thinking about what our exploration options are for here. And remember, the money that we had for last year to drill out was focused on adding ounces. Because when we raised money in December 2022, our large shareholders and the ones who invested really said, grow this closer to 8 million ounces. That's where you need to be. And that's why we still have money in the bank. We drilled until August. There were the forest fires. We really appreciated that nobody was really giving value for drill holes. In addition, during that program last year, we were looking for edges. So even though we have a great record of adding 40 ounces per meter drilled last year, 44 or something like that, we actually were focused on some holes finding some edges and not hitting mineralization, because as we start to get bigger here, we need to start thinking about where's the infrastructure going to go. And yes, we need to start thinking about increasing the confidence in this, getting that to measured and indicated. And that was one thing with that we wanted out of this resource, was to get our QP to do the geostats again and tell us what spacing we need to get into, what he would be comfortable to get indicated. We did have that small area which we started drilling before the 4 million ounce resource that we put out at 25 meter spacing, and we didn't have all the assays back when we put out that resource. We did in this last resource. So, we know we'll be able to convert some areas very quickly to indicated. But what we really want to do is focus on not only the areas that are higher grade, but also take the work that we're doing, and we're doing some high level engineering. Now that we have some met work, you want to think, okay, so where would you mine for these various potential mining scenarios, and overlay kind of your phase one mining areas with where you maybe want to drill out indicated and find higher grade, because you're not going to convert the whole 7 million to indicated off the bat. You're going to convert the areas you're probably going to mine first, and hopefully those are also and in theory they should also be the areas where the high grade hangs together. So there's a whole lot of work going on in the background, and we're running various scenarios on what we could drill, what we should do. And then, we think about it, like, hey, what can we do to improve our odds of success? How can we do this better? And then we run another, version of it, because that's going to improve our odds of success in this market where money is so precious. And thankfully, we have a strong treasury. We've had great shareholder support. We want to make sure that we actually deliver the most value that we can. So we are running and rerunning our potential options to really understand how to add the most value. And, we had these big conferences in Vancouver where we heard from some shareholders. We'll be talking to our other big shareholders over the next coming weeks. And with this news, we've had lots of outreach to our big shareholders. And all of that information is being taken and advising us on what we do next. So, and it's so nice to have options and money to implement options.
Yeah, I mean, having money that gives you a pretty good runway. I mean, I guess if you really had to, you can make it through the entire year if you needed to. That is something that's quite rare in the junior mining sector today. I've noticed some financings announced this week by some other companies in your peer group, and they have not been well received by investors. So that's a position of strength to be in. I'm looking at the CoreMark report that CoreMark put out, a new report, sort of like an update on you guys earlier in the week after you put out the Met results. And I'm just interested in your thoughts on their valuation. So they have a price target of $1 per share, and that's based upon company-wide, resource of, so they're quoting 6.7 million ounces in this report. It's actually larger than that, but let's just go ahead and round it off to 7 million ounces. And they're saying that you're currently trading in an EV per ounce of $9 per ounce, and the peer group average is $35 per ounce. So that's how they come up with the $1 share price. You're trading at 32, 33 cents. So you're literally trading at one third of their price target. What are your thoughts on using that sort of style of valuation? And I guess my follow up would be, looking at the sensitivities that you published in the resource update, you show different cutoff grades for the deposit and what that would yield in terms of an average grade and total size. And what I found interesting is at a 0.6 gram per ton cutoff, you're still well over 3 million ounces, almost 3.5, and the average grade goes up above a gram. So even if you use that and give that $35 per ounce, you guys are still very undervalued. So what are your thoughts on the valuation, and why is the share price so undervalued right now?
Well, I think that the challenge has been lots of the companies which are at that valuation have been at that, or were even at higher valuations prior to the market being where it is now. We have just put this news out, and this isn't a market that's your normal market where you put out news and people instantly re-rate you and value you. We didn't have our network out until just now, so I don't think people have actually been able to run the numbers, and I think there'll be some leaders in the analysts who do some actual modeling to of the deposit based on that network. Like Paradigm, I know they put out some research as well, saying that they thought they could see an economic project, which is what's important. It's not only the scale of resource. As you come into this development phase, people need to evaluate whether or not they think the project is economic for you to get re-rated. And without us doing a PEA, we have to rely on others to kind of do their own math internally. And I think shareholders will be doing, and some of the big institutional shareholders, but they need the information and it's not instant. So, we put out the information. Now we need to go and communicate with the shareholders, talk to them, answer questions. That's really how you get the value up, is you go and talk to the sophisticated investors that are going to run their own numbers, understand the value of it, and want to invest in the stock. It's a really hard thing in this market where retail is so difficult for anybody in the gold sector. It's really not there. People in the retail sector who understand mining are already pretty heavily or fully invested, because many thought we were already at the bottoms, including me. I'm pretty fully invested in the mining stocks, including Banyan, that I believe in. So it's hard. There's not a lot of new capital coming in. So until you see the new capital, it's going to be hard to re-rate. And that new capital could come in many forms. It can be institutional. It could be a change in retail sentiment. So when the broader market re-rates, some companies are going to re-rate more than others. And we want to be in the position where people can see the value. And meanwhile, we've got the cash to not have to dilute right now. So, $7 million plus we have income, which almost covers our G&A, which certainly puts us in a very different position. We're not under a lot of pressure. And I think that's why, we put out good news, and quite frankly, through the fall, putting out good news was a liquidity event, which usually put your share price down. We've had, a little bit higher volume, but we didn't have big volume, and we haven't seen our share price go down. And usually, I'd expect that's because there's people who need to get off positions, and that's what we saw in the fall, was people needed the cash for other things. And so as soon as there was a liquidity event, they were cashing out, even if they believed in a stock. So hopefully we get some investor sentiment change. I was actually uh, pretty pleased with a lot of the feedback we've had on both the net results and the resource.
Yeah, I'm just looking at your chart, and actually since November, you guys are in a little teeny bit of an uptrend. So fingers crossed there. But that's a good point you made, because literally since the beginning, well, let's say since the end of 2022 or the middle of 2022, there has been a net capital flight from the mining sector more broadly, and from the junior mining sector more specifically, a lot of funds leaving the sector altogether. So it's just like really trying to swim upstream. It's that much more challenging, and share prices are not necessarily, you know, indicative of the progress that a company has made over the last couple of years, and the value of what their assets might be in a more normal market environment. But of course, that's easy for me to say now, and it's very hard for me to guess when the conditions will change. So you've talked a lot about getting, like, coming closer towards the PEA and putting together all the data that you need for the PEA. So you've assembled a team over the last few years. And can you tell us about some of the key players on the Banyan Gold, management and advisory team, and sort of what their roles will be over the next couple of years as you advance to that maiden PEA?
Well, probably a key addition most recently was Kai Woloshin, our VP project development. He's really key in helping us on managing the metallurgy. He'll be the guy managing the PA and the consultants in that. all the baseline environmental and our permitting. That's really key. He was there and he was the environmental manager that permitted Alexco's project next door. And then most recently, he was running the largest environmental consulting firm in the Yukon in Cerro and working for the likes of Snowline and Fireweed and Hecla. And he's moved over and is helping us, and that's been absolutely terrific, along with our advisors like Brad Thrall, who's a metallurgist who's built 2 mines in the Yukon, including the first heap leach, and Mark Blythe, who's on our board, is a mining engineer and has a wealth of experience in understanding projects and where they go wrong. And that's really helping us think through a lot of the details that will add value and which others have made mistakes as we start to work towards that. And we're not in a rush because as we do all of that background work, it makes the project better. Putting out our first phase of metallurgy was a key step, and it is phase one. And in I wish that people should go back and look at Victoria Gold's early network or early heap leach results. They're really similar to what we just put out, and they ended up in the end with 74%. We have a lot of work still to do on understanding grain size, gold deportment, grind sizes, and all the processes. 91% from CIL, CIP is actually pretty good. We're pretty confident we'll be able to get a few more percent in that, as well as some areas where you might actually be able to go up in grind sizes and reduce power and operating costs. So we're both looking at things from a how do we optimize on the recovery front, but also how do we decrease and really understand what the potential operating and capital costs would be of these various scenarios that we have. And having optionality, I think, still in positive general results on all three processes is actually a benefit because it gives us optionality for whom might acquire us or what we might build. Previously, well, a couple of years ago, everyone just labeled us as Victoria Gold 2.0. And yes, heap leach is still on the table with that range of recoveries. There are lots of projects. And if you look in our current corporate presentation, we've put various operating projects, what grades they're at, what methods they use, and what the recovery are, so that people can kind of go, they're in a range of these projects with all three of these for both grade and type of potential mining. So we are actually pretty pleased with those results as a first phase. And we've got a whole bunch more work going on in the background, which, as we start to get results on that, we can, tell the market about.
So in your latest presentation, slide 5 is about Canada's newest gold mining belt, the Tombstone Gold Belt, and you've done a lot of these like breakfast presentations, webinars with other companies in this Tombstone Gold Belt that goes all the way to Alaska. I guess it goes from the very far east of the territory all the way across into Alaska. And the Mayo mining area is really right smack dab in the center of it. And you have Eagle, you have Raven, you have Keno Hill, and you have AurMac. So if you add it all up, you've got, I don't know, 14 million ounces of gold and 200 plus million ounces of silver, and probably quite a bit more than that, if you really found it all. What is happening today in the Tombstone Gold Belt? What's happening in Mayo? What is Hecla doing at Keno Hill? Can you give us a full update there?
That's a big question. So, that slide. Let's go back to start from the slide. What I think is this is a new mining belt. There's great discoveries. There's lots of excitement about Snowline. There's lots of excitement about what might be found in the belt beyond that. But when you look at how these mining districts are developed, there's a critical number now that you need 5 million ounces for a deposit to be significant enough for a major, unless you have like ridiculously high grade. So that's a target. But I think another one of those critical numbers is having 20 million ounces within a 20-meter radius and having infrastructure in it, which we've already got that. We've got a mill right beside
A
us, as you said,
20
at
mile
Matthew.
radius, right? A 20-mile radius, not a 20-meter radius, right?
Oh, 20 kilometer. I was using
20
kilometers,
kilometer.
but
Okay. Yeah.
we
Okay.
can use miles too, whichever 20 and 20.
Yeah. You
If
said
you're
20-meter. I was like, that's a bit ambitious.
20-meter, okay. Thanks for catching that. I'm busy thinking sometimes and
Yeah.
get the units wrong. So
Oh,
20
trust me, I
kilometer,
do that too.
like whether it's 20 kilometers or 20 miles, when you're within the proximity of a mill with a heap leach infrastructure, with hydropower already on the property, with roads in a permittable jurisdiction, that is something that is uh, desirable for many of these majors. And one of the main themes is they're looking for generational investments, where they're looking for to be in a district for 40 or 50 years, not just a 10-year mine life, because making significant investments in the community and community relations and infrastructure and capital costs, they want long life projects. So that's we're starting to tip over that without all the other exciting things that are happening in the belt. And I think that's a key driver for us and message that differentiates us from others in this belt, regardless of grade or other things. Permittability, proximity to infrastructure, existing infrastructure, and that proven resource within a reasonable distance is pretty interesting. Hecla, you asked, what is Hecla doing? Hecla's busy getting that underground mine up and running, putting lots of investment in. They've got their head down and working, so we don't hear from them very much these days. Victoria Gold made their guidance, so that's pretty exciting to see them. Stacking is on track and getting the gold out of the ground. That's good news for everybody in the district, because it shows you can permit and build a mine despite COVID and all the associated supply chain challenges and people challenges in the Yukon, and get it into operation successfully. And that's what majors need to see too. And that, both Hecla and Victoria Gold have a good relationship with the First Nation and use the businesses, and the First Nation understands mining, participated in the process. So I think that is pretty compelling. I don't know if that's answered all of your question, because it was a big question.
It was a big question. And you handled it well. I mean, I think a lot of shareholders are thinking, well, does VGCX make a bid for this in the next year? Are they waiting for just the right opportunity to pounce? Are they waiting for the PEA? Some other people are wondering, well, Hecla is actually a little bit closer to AurMac. Is there something there, or are they just focused on the silver and not really interested in the gold? So there's a lot of speculation out there. I don't know if you want to talk about any of the speculation.
Well, my job is to make sure there's multiple competitors, if an offer comes in, right? And my hope is that we have some more time before any offers come in to really add a lot of value, because we already talked about where other developers are being rated, and I know our team can add a lot more value even to where we're currently valued. So, Hecla, they bought attack. So those were gold projects. So if they weren't interested in gold, why would they spend any money on that in the long term? Victoria Gold does have some internal exploration targets. They've got their next phase expansion they're permitting. I don't know when they might decide, or if they decide. But that's not really my worry. My worry is to add the most value, really focus on getting the share price up, and making sure that enough people are interested in the story that when and if there's a bidder, there's not just one.
Very good. So yeah, I've got a couple more questions, but also just open up the floor. If anybody has a question for Tara, please ask to be a speaker, and I'll activate your mic. So I guess I have two questions. I have a question about what are the biggest things that you've learned as a CEO over the last 7, 8 years? Like, if you had any words of wisdom for other CEOs in the sector, maybe one or two key lessons. And then the second part would be, what are the biggest challenges that lays ahead for you and Banyan? So the first part, words of wisdom, things that you've learned as a CEO.
Um, you know, I've learned a lot, because when I started as a CEO, the piece that I didn't have was the capital markets, right? I understand permitting. I've worked with lots of First Nations in the Yukon. Geology I've been doing since I was a child. Running a company, and I ran a private company through some pretty tough gold times. So, running the finances and understanding what it takes to run a company were all things that, are pretty natural to me. The capital markets, the telling, making sure that you're giving enough information to shareholders and appropriate disclosure, but not getting too far ahead of yourself, is something that every CEO has to really think through, and it's something that is a learning experience. Make sure that you promise what you can actually deliver, because then you set a track record of having delivered what you said you were going to do, and maybe even a few positive surprises along the way are welcomed. So that's one thing. Raising money at the time when I became a CEO was pretty tough. So the main thing I've learned is that you need to really build the credibility and relationships yourself with your shareholders. And I had to. I didn't have brokers and that were stepping up to help me back then. I'm sure I could get lots of help now, if that was something we were going to do. But that is, it's really important. Regardless of whether you get help to raise money, you need those individual relationships with your large institutional shareholders, so that you've got that credibility and trust, when you're talking to them, and being credible. There's lots of companies that I wouldn't invest in, because of what I think is the credibility of people, but there's a tremendous number of people and companies that I do invest in, because I like the management team and the jurisdiction. But really, management teams and being credible is really important to me, because I don't have time to watch my stocks every day. I'm busy, focused on Banyan and what we need to do. So I need to invest in other stocks that I can put away and not have to worry about. So those are important. Your reputation is everything in this business. Um, and then on the geology and the technical side, I think I'm always learning. That's the other thing, is don't think you know everything, because you get to something, different stages, and it's like, we thought that, but maybe that isn't quite right. So be open to ideas, and don't get stuck in believing things are the way they are, without, especially in geology. You look at the history of things. People have geological models, and then there's some stuff that doesn't fit the model, and they don't change the model until um, they finally discovered it's not that model. Well, looking at information and evaluating it, getting different ideas, all can add a lot of value. So, and then the other thing is, don't get a big head. That often is a downfall for many people. So, we've come a long way. We've added a lot of value, but we've had some great shareholder support and people behind us, and both be grateful for that, and also know that we got to continue to earn people's support and trust.
Yeah, I think a lot of good points there, especially about the models, because there's so many examples in the space of companies, acquiring projects that were known, and everybody thought, well, this is all it has, and here's the model, and here's how it looks, and here's where people have drilled before, and then new company comes in with a new team and new eyes on it, and they find something completely different, and they totally revamp the model, and it's completely different than what everybody thought it had to be. And that's why it sort of just sat there dormant, and why it was available. So that's always important to think outside the box, and always be learning. So what are one or two of your biggest challenges that still lays ahead for Banyan?
Well, the biggest one is this market, and deciding what to do this year, to add the most value. And, how much money to spend versus how much to keep in the till is definitely a thought. That is a challenge. And um, we're, putting a lot of time and effort into running our various scenarios and thinking things through on that. So, this market's challenge for absolutely every gold mining and other commodity miner out there. So, um, yeah, look forward to times when people appreciate mining projects.
So yeah, so that's something that's totally out of your control. Is there anything that's in your control that's still a big challenge ahead?
Oh, but some of that's exciting, like the work that we're doing on the metallurgy, on the various options, and what work you can do in series or in parallel, but what you really have to do in series and learn from it. I'm really enjoying that because I'm learning so much, and we've got some really smart people who are working on it,
Mm.
and that is super interesting. Some of the high level engineering on how you might mine stuff and the various scenarios, and that's all really interesting and exciting. So I don't think it's a challenge so much as you have to run a lot of iterations before you understand what's going to work. Like, if we were to do a PA, how many tons per day would we focus on? How do you get the background information well in advance of that so you can make informed decisions that help you get the greatest IRR when you want to do that? So there's a tremendous amount of background work, and certainly the team that we've got now is firing on all cylinders, and really some great collaboration on the various pieces that are needed as we move forward to that. And even for geology, like, combining the ideas from the engineers with what's being doing with the network, and then giving that to James to run various exploration models and look at things and think about things he hasn't thought about before. That's all very um, it's all very interesting. So I don't find it so much a challenge, so much as we've got lots of things that we can do to add a lot of value and optimize this project. And it's a matter of picking which ones to do, and managing the cost of some of that, because all that analysis has costs, particularly when you're hiring outside parties. But and it's not necessarily visible to the market. But we know that it's gonna add some value and make what we do when we go drilling again even more valuable.
Yeah, very good. So you have a lot of opportunities ahead, not necessarily challenges. Um, you mentioned about how you're an investor in the sector, and you only want to invest in companies where you have a strong amount of trust and faith in the CEO to keep your best interests at heart, and that's the way you manage Banyan. So, can you tell us how many shares you currently hold in Banyan, and what is that, like 4%, 5% of the total shares?
Yeah, it's about 4%.
About 4% of it. Okay, and
Yeah.
and you bought all of that on the open market or through financing? Is that correct?
Open market financings, and there's a couple options which I, had for 5 years, which I paid for, and I didn't sell a single share, even though I had to pay the taxes. So it kind of gets me up to around 2 million in cash into Banyan.
Yeah, that's an interesting point. Can you explain that to people who may not understand? So, if you're a CEO in Canada and you exercise options, and the exercise price of the options is lower than the current share price, then what happens from a taxable perspective?
If the exercise of the option is lower than the share price, so often
Correct.
if it's
Yeah.
lower, you might not exercise the options. You would participate in a financing, or maybe buy on the market rather than exercise the options.
But
If
if they're
the
expiring, then you have to exercise them, right?
You don't have to exercise them. No, they can expire.
No,
If
so what I'm saying is, let's say it's a 10-cent option and the share
Yeah,
price is 30 cents, and the,
okay,
the, the
you're talking
options are
higher
expiring.
share price. I thought you were talking lower.
Yeah, I was
Yeah,
talking
higher
about
share
the
price. So
price of the option.
so there's a 20% capital gains, of which you have to pay tax on 50% of that. At the taxable rate is 53 or something in BC. So you actually have to pay the full taxes at the time you exercise the option. So often the taxes are as much as the cost of the options, um, and then you have to carry that. And you don't get it back
Yeah.
until you actually sell the shares at some point.
So you could end up doing like a $50,000. You could exercise 50,000, worth of options. You could pay a tax bill of 60,000, and you choose not to sell any shares because you don't want to sell to pay the tax bill. So you end up just totally out of pocket for over $100,000.
Yes, that's
Yeah.
where I'm at on many of my Banyan shares for the ones that I exercise options on.
Right. Okay. And you haven't sold any shares in the last few years, right?
I don't think I've ever sold a Banyan share,
Okay. All
even
right.
when I was a director before I became CEO.
Very good. Tara, I think this is a great chat. We're going to see each other in South Florida in a few weeks, and we'll have another conversation then. I really appreciate it. We have no questions from the audience unless somebody wants to raise their hand suddenly. Um, but yeah, I just bought some shares here today, by the way, at 32 and a half. I think it's a compelling value. Obviously, I am biased, a longtime shareholder, a longtime advocate of Banyan, but I do think the core mark valuation is interesting. And even if you cut it in half and the valuation was 50 cents, it's still very interesting at 32 and a half. So anyway, thank you very much. Have a wonderful weekend. And I will upload this to my YouTube at Goldfinger Capital, and it will be available to, listen to at your leisure. Thank you.
Thanks, Robert.
Appreciate it.